Hello, this is Steve Sanangelo of the SRS Rock Report, and I'm glad you're joining me today. I've got a new video update called The Record Physical Silver Buying and what I believe as continued massive demand, which will push the prices up even higher. Now, we are experiencing a market we have never seen before. Whole countries are in lockdown. Major cities in the US now are being locked down. The degree to which the markets are selling off, disintegrating, even the oil industry, we've never seen this before. So there's this huge disconnect now between the paper silver price and the physical silver price. Some people say it's manipulation. Part of it is, but it has to do with another factor I'm going to discuss. Now, I believe in time we're going to see the silver price. It's actually the disconnect between the paper and physical is going to grow for a while, and then it's going to start narrowing as both paper and physical price move up higher. Now, I want to first start showing you a few charts here of the silver price, the Dow Jones, and the NASDAQ. Now, what's interesting, these are monthly charts. The important line here for traders is the 200-month moving average in the blue line. And right now, silver, after the huge sell-off in the markets, we can see the Dow Jones is falling, NASDAQ is falling. Silver is now at 1239. It's 28% below its 200-month moving average. Even though the Dow Jones is sold off 32%, it's still 27% above it. And look at the NASDAQ, it's still 81%. I believe my forecast is over the next 2 to 4 weeks, maybe longer, I see the Dow Jones falling all the way down to 10,000 points. The NASDAQ is going to come way down here. These markets still have a long way to go. Now, what's interesting, if we thought the silver price was well below its 200-month moving average, look at the oil price. It's 67% below. Right here, the 200-month moving average is $69. Now, this is about the sweet spot for the oil industry, is about $60 to $70, $75. Well, with oil trading at 22.63, it is totally destroying the global oil industry, the shale oil industry. This is far worse than the silver price. Let me tell you, without oil, nothing runs. So with these oil prices being this low, and my forecast is now, we're going to see single digits. We're going to see oil trading at $8, $9 a barrel. And that is going to destroy the U.S. shale oil industry. Now, what's interesting, copper is also well below its 200-month moving average. It's 22% below it, very much like silver. But right here is $2. It's a very important line for copper. Once it goes below that, I see copper falling significantly, down to $1 or more. Now, what's interesting, even though the gold price is sold off from $1,700 an ounce, it's still 37% above its 200-month moving average. Now, gold is behaving better because it's more of the king monetary metal. It's actually the same as the Dow Jones and the broader markets. However, silver here is in the red, below its 200-month moving average. It's behaving similar to oil and copper due to its industrial demand. Now, I'm going to show you what's happening. It has to do with a huge decline in industrial demand for silver right now. Now, this is quite fascinating. I thought for sure when the silver price sold, and these are the two COT reporting times. On March 10th, at the end, it was 1649 of the COT reporting time, and a week later, it fell to 1249. The silver price fell $4.46 since the last COT report, but only 5,700 short contracts were liquidated. Now, here's the COT report. That was the last, right here was the last report. And as almost a $4.50 sell-off, this is all of the liquidation. I first thought it would be here. So we didn't see a huge decline. So we could see the paper price continue to sell off over the next week. We could, or two. But that doesn't mean it's going to impact the physical investment price. That I see even going higher. Now, why is the paper price of silver falling? Well, it has to do with this chart. This is the silver market demand for 2019, according to the Silver Institute. There was 547 million ounces in industrial demand. There was 209 million ounces in jewelry demand, and there was 68 million in silverware, for a total of 824 million ounces. Last year, there was only 178 million ounces of physical silver investment. So you have to look at it this way. With this huge crash in the markets, people shutting down everywhere, there's a lot less demand for industrial silver, for jewelry. People aren't going to the mall. They're not going out and buying jewelry. And silverware demand. So we're seeing a big drop in demand, and that's where most of the silver demand comes from, industrial jewelry and silverware. Only 178 million ounces in physical, but I see this changing over time. Now, why? It has to come down to what's happening with the energy, this and the oil market. This is the chart for gasoline, which is the RBOB contract, wholesale gasoline. I'm going to show why this is important, such a big impact in the future. But we have to understand the oil drives the economy, and what's happening with oil is destroying the global economy and the financial system. So I originally had 90 million barrels for 2020. We were supposed to be about 101 million barrels per day in 2020. That's what we were supposed to average, about 101. Well, I wrote 90 in my last article, 90 million barrels. Well, I actually, before I put 90, I had 85 to 88 million barrels. That's what I thought it would fall to this year. I only put 90. I didn't want to sound so crazy. But now analysts are saying it's going to be even worse than that. And if we look at what's happening, they're shutting down the airline industry. People aren't driving. The cruise ships aren't running. I think this year we could see demand fall 25 million barrels or more. And I don't believe it's going to turn around and pick up at the end of the year. This is very bad news. Now, it's interesting. On CNBC, Harold Hamm, who is the CEO of Continental Resources, he's the man in charge of Continental Resources, chairman, and he was on CNBC. Continental is the largest Bakken producer in the Bakken. It's also the largest shale oil producer in Oklahoma. And what does he say? We're over there defending Saudi Arabia's national security, and they're undermining us over here by dumping oil. So Harold Hamm's big deal is it's all the Saudis' fault. Like the Russians, they're dumping oil. But if we look at this chart, since 2008, the blue area shows U.S. oil production growth, and this olive color is Saudi Arabia. Since 2008, the U.S. has added 8.5 million barrels a day of new production, most of it shale, compared to 1.6 million barrels a day from Saudi Arabia. The U.S. has produced 5 times growth, 5 times Saudi Arabia. Why are we telling Saudi Arabia, 84% right here, 84% of the increase is from the United States? Why does Saudi Arabia have to cut production? If they want to dump oil, let them dump oil. They're dumping oil at 25, but now the price is less than 25. But again, what's interesting, it's not what's happening in the other world. The U.S. has been the major, accounted for the huge increase in global oil supply. And it's going to fall the most in the world. And I don't think Americans realize how damaging that's going to be. But I wanted to show you this because the energy market drives everything, and it's right now, it's disintegrating right before our eyes. This is according to investing.com, this was close of Friday. The wholesale gasoline price was 61 cents a gallon. Now, according to Georgia, I'm just using Georgia. I used to live there, so I decided to use Georgia. This is how they break down the Georgia gas retail price per gallon. Here is the wholesale price, 61 and a half. The federal tax in Georgia, federal tax on gas is 18.4 cents. The state tax in Georgia is 7.5 cents. And I just gave a 5-cent profit per gallon for the gas station. That means at 61.5 cents on the close of Friday, the price will be 92 cents, 93 cents at the pump. But it won't get there yet. They have to go through this stock. But in a week and a half, 2 weeks, could be sooner, The price of gasoline in Georgia is going to be in that 90 to $1 range. But what happens, this is my estimation within the next 1 to 2 months, I see the wholesale price moving down to 35 cents a gallon, which means in Georgia, you're going to be paying 66 to 70 cents. I see cities in the United States in the next month, 1 to 2 months, they're going to be paying 65, 70 cents a gas for a gallon of gasoline. This is, people don't realize how bad the situation is. It's good for consumers. It's destroying the U.S. shale industry. Now, guess what? On Sunday night, the gasoline price is down another 12%. It's at about 54 cents. It's fallen 7 cents in just one day. We're going to get to that 35 cents much quicker than I thought. So it's amazing how quickly everything is changing in the market. Again, the reason why we're seeing this low paper price in silver is not just due to the commercial banks manipulating the price and pushing it down. I'm not saying that's not part of the reason, but again, it has to do with the huge decline in demand for industrial silver demand, jewelry demand, and silverware. But that's going to change here, and I'll show you why. This is the silver market dynamics. We've got mine supply and we have investment demand. And I believe investment demand is going to be the leading driver of the silver price. Now, silver mine supply, especially as a byproduct of base metal mining, which is 61% of global silver supply comes from base metal mining, copper, lead, and zinc, will start to decline considerably in Q2 and Q3 2020. Mine supply could easily fall by 100 to 150 plus million ounces by the end of the year. Now that sounds crazy, but already they're closing mines down, and I'll show you. Now, physical retail silver investment will continue to surge higher, even demand will surge higher, even if they can't get, if the supply isn't there, pushing premiums even higher. However, as a financial system becomes under more strain, I believe large investors, hedge funds, and institutions will start buying 1,000 ounce bars. And my analysis suggests that as the financial system continues to deteriorate, there's a huge disconnect now. There's all these red flags taking place in the U.S. Treasury market, in the credit markets, and in the junk bond markets, actually in the money markets. Things are starting to really freeze up, even though the Fed and central banks are trying to provide liquidity. In time, I believe we're going to see the big traders, the big hedge funds, they're going to start acquiring the 1,000 ounce bars. And then the public will continue to buy the retail silver, the smaller bars, the 10 ounce bars, the 100 ounce bars, 1 ounce bars, and a lot of coins. So as I said, mine supply is going to fall and probably fall drastically. And on March 17th, Pan American Silver announces temporary suspension of operations in Peru because Peru had declared a state of emergency. So today Pan American announced that the operations at its 4 mines in Peru are temporarily suspended. And this is due to Peru declaring a national state of emergency requiring a 15-day national quarantine. It's not going to be 15 days. It's going to be extended. We're not going to just stop for a while and then everyone's going to go back to work. I think this, as the situation unfolds globally and as this contagion spreads, we're just going to see more shutdowns of mines, not only in Peru, in Chile, and even Mexico. And that's really going to impact the silver supply much more because 61% of silver is a byproduct of copper, lead, and zinc production. Now, again, this is from Pan American Silver's Q4 report for 2019. These are the 2 silver mines they shut down. It accounts for 6.3 million ounces of silver a year. And these are the 2 gold mines that it shut down almost 250,000 ounces. That's how much that they produce in a year. So already, I don't think these mines are going to start producing silver again, not anytime soon. So again, we're going to see a destruction, a collapse in the silver supply coming from the mining industry. Now, what we're seeing, if we're seeing a decline soon, a decline in silver supply, what we're seeing is a huge increase in demand for industrial silver. I mean, for investment silver. Again, industrial silver, jewelry, and silverware, those three markets are going to continue to see a reduction in demand, and that's going to impact the paper price. But as more and more investors wake up, they're going to start getting the physical, because the financial assets and the financial market are going to get even in more dire predicament. So I showed this in a recent article. This is a various precious metals dealers Silver Eagle buy and sell prices as of March 17th. That was Wednesday. These are the four top online dealers. And as we could see, if you wanted to purchase silver, it was 22, a Silver Eagle, it was 22.98. But if you wanted to sell to this dealer, you only get 14.13. So it was $8.85 difference. And if we average them, not including this one because there was no stock, they didn't update this. Basically, there's about a $9 difference between what you can buy and what you can sell. Now, what's interesting, I looked on Friday and updated this chart. All the prices moved up. Well, what I did is I also showed the prices did move up a little bit, but these prices here were based upon buying the most. I think this one you had to buy more than 500 ounces. So these were the best price that you could get. This next one was actually less. I based it on a less of a number. But here, you still have to spend $24.64, and look what, if you sell it to this company, is a $10 spread now. But what's interesting, some of these companies, some of these dealers have increased their buyback price. The second and fourth one here, if we compare it, this was $14.40. Now they're buying it back for $16.79. The fourth one was $14.16. Now they're offering 17. So what we're seeing in just a few days, some of these dealers are increasing their buyback price. Because why? They're running out of stock. They're running out of stock. There's only so much they can get from wholesalers, from the US Mint, from the Canadian Mint, and from private mints. Now, they're in the business to buy and sell silver, or let's say precious metals. Silver is one of them. They're running out of stock. So to get more stock, what they're going to do is they're going to raise their buyback price. I see this continuing to happen. I see we're going to see even a higher buyback price because they need to get stock, because they're in the business to buy and sell silver bullion. Now, it's important to understand what's happening in the economy, and the global market has never happened before. And I believe it's going to get even worse. So I believe mine supply will continue to fall and investment demand will continue to increase. And what's going to happen, I believe the next leg, we're going to continue to see huge demand for retail silver, and that's mostly by the public. But I do believe as we see more issues with the financial system and financial assets start to decline even more or become even more problematic, we're going to see either large investors, hedge funds, and institutions buying the 1,000 ounce bars. It makes more sense for them to do that. So that's going to pull the paper silver price up, as well as demand for the retail will continue to pull it up. And I believe in time, it's going to be hard to find physical silver. Just like it is hard to find toilet paper. Or if you go on Amazon and try to get canned vegetables or canned vegetables, you can't get them. So I do believe we're going to see much higher silver prices as this global contagion continues to spread. So I will be doing more updates in the future on more details about what's happening in the overall markets, the economy, the energy, and the precious metals. But people, I really think the gold and silver, the values are going to continue to increase because we don't come back from this one. It doesn't matter if this global contagion peaks and declines. The damage in the next 2 to 3 months will be already done. We don't come back from this one. We will never return back to 2019's GDP of about 87 trillion globally, or we will never come back and the world will demand more than 100 million barrels of oil. I never see that happening again because we're going to destroy so much of the oil industry. So thank you for watching this last video update. And if you have not yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. Thank you.